In this presentation, we will continue on with our comprehensive problem related to a hospital. We have the information on the left-hand side. We've been entering that information into the blue area on the right-hand side, the general journal, then posting those journal entries to our trial balance worksheet. At this point, we're going to continue on. In order to do so, we're going to have to unhide some cells. We're going to do a little bit of maintenance before we keep going. There's going to be some hidden cells between cell I or columns I and O, so we want to unhide those columns. To do so, we're going to click on column H and then select over to column L, let go, and then right click on that selected area and unhide. So we'll unhide the selected area, then we're going to rehide this selected area or these transactions we no longer need. Hopefully, we might have to unhide them at some point, but we're going to hide them for now. So we're going to put our cursor on the E, left click on it, and drag over to I. E to I, and then let go, right click the selected area, and hide those cells. So this is where we will be journalizing our journal entries. We're going to be posting them to the worksheet right to the right of it, and to the left, this is going to be our data that we will be picking up. We're going to now be on number 6 is the one we are on. Number 6 then says we had a collection on account. Collection on account of $1,174,000, and then accounts that became uncollectible are $13,300. So $13,300 became uncollectible, and then we said that we're going to be collecting the $1,174,000. So the collections on account for the entire time period is what we're thinking here. The entire time period collections on account. We're going to scroll back up. We're going to say this is going to be number 6. And we're going to say that cash would be going up. This would be similar to a for-profit type of organization. The debit then is going to be for the amount of that $1,173,000. And then we also are going to record the allowance. So the allowance for doubtful accounts. We're saying that some of these accounts receivables are no longer collectible. So what's going to happen is accounts receivable is going to go down with a credit. We're going to debit then the allowance for doubtful accounts as we would in a for-profit type of organization with the use of the allowance method. So we're going to say the second account is going to be allowance for uncollectible accounts. That is going to be equal to the $13,330 and enter. And then the credit side of this is going to be accounts receivable, which will be decreasing. So I'm going to say equals the accounts receivable, notes receivable. That's going to be on the credit side. We are in cell M5. Within M5, I'm going to say negative sum, the trusty negative sum formula, the plug formula, and enter. There's our transaction. Let's go ahead and record this. Up top, we've got the cash. We're going to go to cash. And also note before we do that, you could think of this as two separate transactions. If we think about our data over here, we're going to say that the collections on account, we can think about that as a debit to the cash, credit to accounts receivable for the same amount. And then if we were to record the $13,300 as a separate journal entry, then we would say that that's going to be a debit to the allowance for doubtful accounts or allowance for uncollectible accounts, and it would be a credit to accounts receivable. So if it's easier to think about this in two transactions, you can do so. All right, so let's go ahead and post this. We're going to post the cash first. So cash is going to be in cell Q3. Within Q3, we're going to get into the cell by saying F2 plus F2, and then scroll over to that $1,740,174, that making it go up in the debit direction. Then we have the allowance for uncollectible accounts. That's going to be here in cell Q5. Something's in Q5, so they go into it. We're going to say F2 plus F2, scroll over to that $13,300 and enter. And then we've got the accounts receivable and notes receivable. So that's going to be over here in cell Q4. So within Q4, we're going to say F2 plus F2, scroll over to the accounts receivable and notes receivable and enter. And that'll decrease it. It's going to a negative. Don't let that throw you off. All right, so then we're going to scroll back over and we're going to say what's going to happen for number 7. So now we're going to be on number 7. I'm going to ungreen number 6, right-clicking on it and ungreening number 6. Then we're going to go to number 7, right-clicking on it and making it green. Number 7 then says cash payments of vouchers payable paid to employees and suppliers. So this is going to be for the time period, the amount that we paid off on account. So we paid the cash, and we're going to be decreasing the equivalent of the accounts payable, which will be the vouchers payable account. So I'm going to say this is number 7. We could put the cash first. It might be easiest to do so. We'll put the cash on the bottom. I'm going to say cash is going to be the cash, and then the vouchers payable. So that's going to be the debit to vouchers payable. The amount then is going to be equal to, scrolling back over, scrolling back down, not that far down. It's going to be equal to number 7. It is that far down. That 1,337,700 and enter. The credit is going to be for the same amount. There's going to be our transaction, debit the voucher payable, credit to cash. Vouchers payable, then we're going to record that. That will be in cell Q12. Within Q12, we're going to go into that cell by saying F2 plus F2, then scrolling over to the vouchers payable debit of the 1,037,700 and enter. And the next item will be cash. So cash is going to be going down. So we're going to go to the cash account. That, of course, will be up top. Our first account, we are in cell Q3. Within Q3, we're going to get into that cell by saying F2 plus F2, and then scrolling down to the cash and the credit and enter. There we have that. If we scroll back down to the bottom, we see that we are in balance given by the green zeros. And then we're going to scroll back over and see what we have next. Number 7 has now been completed, so we're going to ungreen number 7, right-clicking on it and ungreening number 7. Number 8 now, the one that we are on. So number 8 is the one. Number 8 says we have supplies issued to nursing services. So we have this supplies that are going to be issued. In other words, we're going to think about the supplies being basically the medical supplies. That's going to be our inventory. We're going to issue them out, so we're basically going to expense the medical supplies at this point in time. So we're going to have an expense of the supplies, and we're going to be decreasing what we have as the inventory. In other words, we're tracking the inventory up top here, medical, and then we're going to be expensing the nursing service expense and crediting the inventory. Let's take a look at that. We're going to go and say this is going to be number 8, and we are in cell K10. Within K10, we're going to say that this is going to be equal to, scrolling down to those nursing service expense. That's going to be the debit. So we are in L10 equals, scrolling back down, and we're going to pick up the 101,170 and enter. Then we're going to have a credit for the same amount. We're going to credit the same amount. That's going to go to inventory. So the credit is going to be going to inventory. Scrolling back up, we're going to pick up the inventory. So here's our transaction. We're going to post it now to our trial balance worksheet. We're going to go to the nursing. So scrolling down to nursing service expense. We are in cell Q24. Something is in it, so to go inside it, but we're going to say F2 plus F2. Scroll back over. We're going to pick up the nursing service expenses and enter. There we have that. And then we have the inventories. The inventory is going to be the one below. So we'll scroll back up. We're going to pick up the inventory. That's going to be in cell Q6. So within Q6, we're going to say F2 plus F2. Scroll back over, and we're going to pick up that credit of the 101,170 and enter. So there we have that. All right, let's go back over and we'll see if we're back in balance. We should be back in balance after that. As we can see by the green zeros, it looks like we are. That's a good sign. Now we're going to go to number 9. I'm going to ungreen number 8. We're going to right click on it. We're going to ungreen number 8. Then we'll green up the number 9. So we'll make number 9 green. Where we have accrued interest income on investments as at year end. So this is going to be on our investments. We have investments. They've accrued interest up to this point, up to the ending time period. This is an adjusting entry in essence. And therefore, we're going to be recording the accrual of the interest. So that means that we have interest that has been earned. We have not yet received yet. So cash is not going to be going up. We will be increasing some type of receivable account. So we got a receivable account related to the interest. We're going to call that accrued interest receivable, which is going to be right here. So that's going to be the debit. We're going to scroll back over. We're going to be on number 9. We are in cell J13. Within K13, we're going to say equals. Scroll over to the accrued interest receivable. We're going to pick up the amount by saying equals and scroll over to that amount being the 2,300 and enter. So there's the debit and here is the credit. Then the second half, the bottom part, is going to be inventory. So I'm going to say equals, I'm sorry, the second half is going to be investment income. That's going to be income. Investment income is in O14. So there is our transaction. We're increasing the revenue income type of account for investment income, interest income, and we're increasing the receivable that we have not yet received but have earned. And that's going to be the accrued interest receivable. This is an adjusting entry. Let's post this out. So accrued interest receivable will be up top. We are in accrued interest receivable. We are in cell Q7. Within Q7, we're going to say equals. Scroll back over, pick up the accrued interest receivable 2,300 and enter. There we have that. Then we're going to pick up the investment income. Investment income, that's going to be down below where we have investment income. We are in cell Q18. Within Q18, we're going to say equals. Scroll over to the credit of the 2,300 and enter. So there's the other side of that transaction that puts us back in balance with the green zeros. Scrolling back over to the left, scrolling back down, we're going to ungreen number 9. Number 9 now having been completed. We will ungreen that. We're going to green up number 10, that related to depreciation. So depreciation, next one. Depreciation of building and equipment. So we've got the building and the equipment and the depreciation. This is going to be a straightforward type of transaction, very similar or the same as in a for-profit type of organization. We can see that we have a building here. We have the equipment. We're recording the depreciation related to it. We put the building and equipment on the books as an asset as opposed to expensing them at the point of time of purchase. Then we're going to have the contra asset account being the accumulated depreciation, which will increase in a credit direction as opposed to a debit direction as most asset accounts do. And as it increases, it will be decreasing the book value, which is the cost minus the accumulated depreciation. The other side will be post to depreciation expense, allocating the cost to the expense in the time period that we have used the property, plants, and equipment, or at least that's the hope, and that would be in accordance with the matching or expense recognition principle. All right, so let's go ahead and record this out. We're going to scroll back down, and we are going to be in number 10. Number 10 is going to be a debit to depreciation expense. So we're going to debit depreciation expense at the bottom. The credit is going to be to accumulated depreciation for the building, accumulated depreciation for the building, and then accumulated depreciation for the equipment. So there's going to be our credits. We're going to pick up the amounts. I'm going to be in cell M17. Within M17, I'm going to say negative of, scrolling back down, we want the 67,000 and enter. And then the next account, we are in cell M18, is going to be negative, scrolling back over, of the 87,000 and enter. Okay, so then we need the debit in depreciation expense. To get that, we're going to use the trusty negative sum formula. So we're going to say negative SUM of these accounts. And there we have that. There is the debit. Let's go ahead and post this out. So depreciation expense, that's going to be on the bottom. So we are in cell Q26. Within Q26, we're going to say equals and scroll over to that 154,000 and enter. Next, we have the accumulated depreciation on the building. So I'm going to scroll back up and pick up the accumulated depreciation on the building. That's going to be in cell Q9. Within Q9, we're going to say equals. Scroll back over to the accumulated depreciation on the building, the 67,000, and enter. It goes up in the credit direction, bringing the book value down. Next, we have the accumulated depreciation on the equipment. So here's the equipment account. We want to be in the accumulated depreciation. That's going to be in cell Q11. Within Q11, we're going to say equals. Scroll back over, pick up that credit of $87,000 and enter. So that brings our credit balance up in the credit direction to the 202, which brings the book value down. So there's that. If we go back down, we see we are back in balance. If we go through these accounts, these are the ending accounts as of this point. So you can take a look at them, check your work on this so far. Then we're going to go and move to the next component, which will be the closing journal entries next time.